The GCC governments have earmarked $100 billion in water sectors to combat water scarcity between 2011 and 2016. According to Emirates news agency WAM, the investment looks to improve desalination technologies, including solar energy, as well as maximising on wastewater treatments and recycling. The UAE has planned several wastewater treatment and recycling projects to improve water management practices in order to meet rising demand of the scarce and costly resource. Abu Dhabi, for example, will add more than 30 million gallons per day of desalination capacity to its water network, following a green light from a power and water plant extension at Mirfa. Gulf countries are among the world's top 10 producers of desalinated water, which currently provide 2/3 of the water requirements for the MENA region. Brazil Foods, the world's largest poultry exporter, is looking to set up a $120 million factory at the Khalifa Industrial Zone by the end of the year. South America's largest food processing company is the first to announce its plan at Kizad's manufacturing cluster. The company is looking to reach its full production capacity of 80,000 tonnes of food per year by 2014. Shipments of Brazil Foods through its Sadia brand to the Middle East represent 32% of its total exports. The company is hoping that its foothold in Kizad will help boost its food portfolio in the region. Mashreq Bank, Dubai's second biggest lender by market value, saw a rise of 11.7% for its second quarter net profit of 320 million dirhams, according to Reuters. For H1, the bank reported a net profit of 591 million dirhams, up 7.1% from the year before. So with that, let's take a look at the stock indices across the GCC. Currency markets closed in the red this past week as strong risk-off sentiments dominated Friday's trading session. On Friday, the region of Valencia formally requested financial aid from the Spanish government. To judge the magnitude of Friday's announcement, we earlier spoke with Gaurav Kashyap, the head of the DGCX desk at Al-Pari Middle East.
Well, markets were largely range-bound in trading last week. We saw risk appetite moving slightly higher on positive spurts of optimism following a very strong Q2 earnings season from the U.S. equity markets. But unfortunately, that optimism was short-lived come Friday's trading session when, as you had mentioned, the region of Valencia had requested Spain for a formal bailout worth around 3 billion euros. Immediately, we saw a big sell-off in euro crosses. The Spanish 10-year yield popped up to 7.3%, which is close to record highs. The Spanish IBEX equity index also shed its second most amount in almost 4 years by losing more than 5.3%. And overall, we saw a big sell-off in risk sentiment, and we expect that sentiment to continue into trading this week. We've seen the euro continue moving lower in trading this week. And now the focus will turn more towards the global growth story. We have several G4 nations such as the UK and the US announcing their global growth forecasts, and once again the picture expects to remain very gloomy. Friday, the US economy is expected to show growth at 1.4% for Q2. This is down from 1.9% previously. And of course, the UK economy is also expected to show a contraction of minus 0.3%, down from a previous contraction of minus 0.2% in Q1. So overall, the data is not going to be lining up to be very nice. Also, China is expected to have their flash manufacturing data coming out tomorrow early in the morning, and this will be followed by several key purchasing manager indexes from the Eurozone.